Welcome to The Rubber Meets the Road Economics, the podcast where we explore the driving forces behind today's economy and their real-world implications. Join investor Hunter Craig as he interviews Professor Edwin Burton from the University of Virginia, delving into the complexities of economics with clarity and insight. Whether you're an economics enthusiast or just curious about how economic policies affect your daily life, you're in the right place. Let's get started.
We're here today, July 17th, 2025, with world-renowned Professor Edwin T. Burton from the University of Virginia. Professor, crazy times. The president is talking about tariffs, EU, China, everybody. What's the effect of tariffs and who pays them?
Good to see you, Hunter. It's great to do another podcast on this beautiful Thursday in July. Tariffs are a pretty simple subject, and I think the best way to think about it is tariffs are like a sales tax. In fact, they are a sales tax. They're exactly like enacting a sales tax on average that's 30% of all the imported goods that people consume. Now, some of those are intermediate goods, of course, that go into building automobiles and everything else. So it's like a sales tax. So if you think, what would a big increase in the sales tax do if we did that, say, nationally in the U.S.? Well, the first immediate effect is prices would tend to go up because they'll have to absorb some of that sales tax increase. But the economy will be hurt by that. Consumers will have to cut back on other products that they normally buy. Sales tax makes things more expensive, and so people, assuming they have the same incomes, will spend less. So the net effect on inflation will be fairly muted. There may be an uptick for a couple of months in the CPI, but then that'll fade away, and it's unlikely that the inflation that results over 6 months will be any different or much different than if there'd been no tariffs. The big impact of tariffs is slowing the economy down, just like that would be the big impact of raising a sales tax, or frankly, any tax. So that's the best way to think about it. Somehow there's a narrative out there that China pays the tariffs or the European Union or Britain. No, American citizens pay the tariffs that are being enacted and some proposed by President Trump. And so it works just like a sales tax. If you understand how sales tax works, this works the same way. And it's just as regressive, by the way. Sales taxes are very regressive. Poor people get hit much harder than high-income people. And that's going to work the same way with the tariffs. Tariffs are not a great idea. Now, the interesting thing about the Trump tariffs is, I'm sure you've all heard of the taco trade. Trump always chickens out. He wakes up on a Monday morning and says, wow, let's have a big bunch of tariffs. And then Tuesday afternoon, when somebody complains, he said, well, I was kidding. We're going to delay the implementation for a month and so forth. The latest delay is for August 1st, but if you look at the net effect of the tariffs that are currently imposed, they amount to about 30% on average on the goods they're imposed on. That's up from 2.5%. So that's a massive tax increase, a massive increase on the sales tax, and it'll have a pretty tough impact. The economy is very likely to slow dramatically as we get into the second half of this year. That's a prediction no one else is making, I might add. Everyone else thinks the second half of the year is going to be great and we're going to be off to the races. I don't think so. I think the tariffs are going to slow the economy down. There's always the feeling, sometimes you hear people like Secretary of Treasury Bessent say, well, at the end of the day, there won't be big tariffs. What we're doing is we're putting out big numbers to get people to come to the table, so all tariffs will be lower. But that's not the indication coming out of Japan or India or China or the European Union. Or even Canada. They're all saying, hey, you do this, we're going to fight back. We're still looking for the first real deal. There wasn't a deal yet in the United Kingdom. There was one announced, but there still is no deal. And every week, Bessent comes on the TV and says, just wait till next week. And then Lutnick says the same thing. Wait till next week. We have a whole bunch of deals coming in. Week comes and goes, and there are no deals. So far, there's not any deal. Well, you might think maybe there's one in Vietnam, but even the Vietnamese have said, no, we're not there yet. You notice Trump always thinks he has the upper hand, but did you notice the NVIDIA H2 chip? That was something Trump banned because he didn't want the Chinese to have that chip. It's a graphic chip that uses an AI processing. The way AI works, as everybody knows, is you combine a microprocessor with a graphics chip, and that's how NVIDIA became such a big stock. They were the biggest producers of graphics chips, still are. So anyway, NVIDIA was unable to sell those to the Chinese, so the Chinese simply slow-walked the rare earth minerals that the U.S. needs for almost every kind of electronics. You can't build a washing machine without them. And once China started slow walking that, Trump decided maybe NVIDIA should sell those H2 chips to the Chinese. The upper hand is with the Chinese and with the rest of the world. And here's why. We have elections next year in 26, but they don't start in 26. They start in 25. People are already campaigning. Some primary elections already started. By the time you get into 26, we'll be in full political season all year. And if these tariffs are still the number one issue on the plate, recent polls show that 60% of Republicans are against the tariff. 60% of Republicans. So that's not exactly a winning issue for a Republican in a close district. Chinese know that. They follow American politics. European Union knows that. Canada knows that. India knows that. Japan knows that. So what's Trump thinking? You keep reading in the press that the Trump administration folks, Lutnick and all these folks, they say, we have the upper hand. U.S. is, they have to do whatever we want. Well, that's really probably not true. Time is not on Trump's side on this. So Trump's not a stupid man. He's a smart man. He will fold. So the taco traders will win what they're doing. When this is all over and the smoke clears, there's been all this conversation and back and forth on tariffs. The tariffs will gradually disappear from the conversation. Because by the time you get into 2026, the last thing any Republican wants to hear is the word tariffs. People don't like it. The public doesn't like it. It's causing problems with our allies. Remember, we went after friend and foe. We didn't separate those out. It's not just aimed at China. It's aimed at the whole world. So it's very bad policy. Its main impact is to slow our economy and any other economy that tries to retaliate. It's the phrase beggar thy neighbor was brought into play in the 20s to describe the Smoot-Hawley tariffs. The whole idea was everybody just puts a shotgun to their head and pulls the trigger. And that's kind of what we're in the process. But the better angels will win this and prevail. So don't sell all your stock quite yet, because come next year, I'll bet by March of next year, no one in the White House says the word tariffs again.
Financial Press this week came out and said inflation is rearing its ugly head. What do you say, Professor?
I saw about 6 or 7 articles this week right after the CPI number came out saying that kind of headline, inflation is back, inflation is back. What was the actual fact? The market was looking for a 0.3% number for the month of June. And so we were all breathlessly waiting on Tuesday morning for the number at 8:30 in the morning. That's when they give those numbers, at 8:30 Eastern time. And out it came. What a shock. It came out at 0.3. Came out exactly as expected, exactly what was in the marketplace. That gives you a 12-month trailing inflation number of 2.7. Now, inflation has been between 2.5 and 3 for the last 12 or 13 months. So the proper headline, if you looked at a chart of inflation, all you see is a curve going down. You don't see any big blip occurring in June. And one number doesn't mean anything anyway, because these numbers are all sample numbers, and they're subject to big revisions. They may revise that number to minus 0.01, and then what was the point? Be careful about putting too much interest into one number. They're sample numbers. That's not a real number. That's a sample. All economic data you'll ever see, GDP numbers, all that, they're all sampled. And that's why they're revised so much, because one of the samples might have fudged one number, and changing that one number could change the overall result, depending on, because it's a sample. So inflation actually was unchanged, more or less. It's running between 2.5 and 3. We're not precise about where it is. My guess is the inflation is over. It's not over in the sense that we'll keep getting numbers around 2%, and they'll gradually hit 1.5% probably within the next 6-12 months. And pretty soon people just lose interest in the entire discussion. Inflation is not the problem right now. That's not a major economic issue. That was, and when it was an issue, they didn't do anything about it. In August of 2021, when the Fed met in Jackson Hole and the inflation rate was slightly under 6%, which is very different than 2.7%, when it was slightly under 6%, we heard from Fed Chairman Powell, oh, that's just transitory. We don't need to do anything. It'd be a mistake to take any action. It's not really a problem. Well, it actually was a problem then. It's less of a problem now. This is the last war. Inflation will continue. We'll still see the price level go up, but it'll go up at increasingly lower numbers. You're going to see average inflation slip below 2% at some point over the next 12 months, and it'll probably stay there. Unless the president fires Jay Powell. Now, I'm not convinced Jay Powell is by any means the best Fed chairman in history. I think he's missed the boat quite a bit. He didn't take action when he should have taken action in 2021. Should have taken it not in August. He should have taken it in January. The data was pretty obvious that the money supply had grown by nearly 50% by that time in 12 months. And so why wouldn't you take some action? And, well, he didn't believe inflation was a problem. And partly he did, and it's kind of a funny idea, but what motivates a lot of the Fed research is the idea that expectations are what cause inflation. So if inflation's 6%, but people expect it to be 2%, then it's going to go back to 2%, says the Fed. That never happens. So they take all these surveys about expected inflation, and you watch the next Powell press conference. He'll spend a lot of time talking about expected inflation. Expected inflation could not be more irrelevant. What's happened this year on expected inflation? It's gone steadily up from 3%. It's now 6.5%. That's expected inflation. Meanwhile, actual inflation has been steadily going down. So expected inflation is largely irrelevant. But Powell thinks it's a big deal, even though it has never been a good predictor of actual inflation. I don't have any idea why he thinks it's a good idea because there's no evidence for that point of view. But the big problem with Powell is he keeps telling everybody that he can control overnight rates. He can't. The market controls overnight rates. Again, I've said on these podcasts for the last year or two, if you just consult the 3-month and 2-month Treasury bills, you'll know what the Fed's going to do. Well, let's consult them. The 3-month and 2-month Treasury bills are about 433, 45, somewhere in that territory, but well above 425. The current Fed target range is 4.25 to 0.5. So T-bills are right inside that range. If he cuts the rate down to 4 to 1/4, he'll take T-bills. T-bills will be above the range. And that'll set up an amazing arbitrage. Now, that arbitrage used to be tougher to do for capital controls, but all those capital controls were just as recently as 2 weeks ago, they disappeared. So that arbitrage is possible, and he knows that, and the Fed desk knows that. So there will be no rate cut in 2 weeks. You heard it here, but it's simply logic. These are big markets. The Wizard of Oz sitting behind a green cape and waving his wand is not going to determine the overnight lending rates. There's just a lot of buyers, a lot of lenders, and a lot of borrowers in that market. And the Fed is just one. There is one way the Fed can do it. Print money, buy treasuries. Yes, they can force the whole treasury yield curve down. Currently, the money supply is about $22 trillion. So to force it down might cost, who knows, $5, $10 trillion. So if we increase the money supply by 50% over the next 3 weeks, I guess we can kind of force billions down. Probably not a good idea because it'll cause massive inflation later. But if the Fed doesn't use its balance sheet, if it doesn't increase the money supply by using its balance sheet, it doesn't control rates. The market controls rates. The Fed has to do something to control rates. It has to buy securities or sell securities. Just sitting there in your throne and saying, let there be lower rates, it's interesting the president's reaction. He said the other day, I think rates should be lowered to 1%. Well, if I had to guess, you'd probably take $40 trillion in purchases, so you would have to probably more than double the money supply to pull that one off. I'm not even sure that would do it. The reason that all works is the central bank is interest rate insensitive when they buy treasuries, so if you want rates to not go up and say you're selling $40 billion or really closer to $70 billion these days of 3-month treasury bills, just call your friend at the Fed and say, would you buy all $70 billion? And the guy over at the bank, Powell, he'll say, sure, I'll buy them all. And believe me, rates will not go up. They just keep selling all the national debt to the central bank. That's kind of what Turkey did. That was a sharp move. That got you to 100% inflation rates. Hopefully that's not the direction we want to go. So watch the Fed's balance sheet. If you want to know if we're going to have inflation, don't look at tariffs. They're irrelevant. Look at the Fed balance sheet. If you see that thing growing and M2 growing faster than maybe 2-3% a year, if you see it start popping up to 4, 5, 6, 7 and higher, maybe even 15 or 20, then there's going to be a lot of inflation. And ultimately, that'll drive rates higher, but in the short run, it'll keep them lower. So the Fed could intervene and do that. Now, not to extend this too far, but I watched Kevin Warsh on CNBC, and he was trying to thread the needle because President Trump wants lower rates. So the last thing Warsh is going to say, I'm not for lower rates. It's not going to come out of his mouth because he wants that appointment. So does Hassett. Those two guys are vying for it. I think Hassett will get it, by the way. That's my forecast. But anyway, Warsh was out there saying, oh, yeah, we're going to lower rates. We're also going to lower the balance sheet. Well, those are inconsistent statements. Warsh just flunked my monetary policy course. I mean, that's ridiculous. What are you going to sell treasuries and that's going to lower rates? How does that work? And he said another thing I thought was very interesting. He said, back when I was at the Fed during the pandemic in 2020, we lowered rates and it was great. There was no inflation. Well, he forgot to mention they increased the money supply by over 15%. And that's how they kept the rates lower. And yes, you didn't have inflation immediately, but within 3 months, you started the worst inflation since the 70s. Biden helped. He thought the inflation wasn't high enough, so he spent $6 trillion and increased the money supply even more. So it took a little active work to do what they did, and all the policymakers looked the other way. The inflation was caused by events that started in early 2020. The Fed finally took action when? When do you think they would take action? March of 2022. 2 years. And by the way, they took action the day inflation peaked. You could almost say taking action was the top of the inflation market. So instead of preventing inflation from going anywhere, they jumped in when it was pretty much on its way back down. The Fed has done a very poor job. I agree with Trump about that. Powell's done a very poor job. He should have restrained the growth in the money supply. That's what causes inflation. The Fed can stop that because they can restrain money supply growth. But they didn't do it. They chose not to do it. They chose to bury their head in the sand. And if you look at every single Powell presentation, he has 20 or 30 pages of data. There's one thing that's never in the data: the money supply. As if you wanted to know, what determines the price of peanuts? I saw they doubled in the last week. Well, one thing you don't want to think about is supply and demand. Gosh, that can't have anything to do with it. Well, no, the demand went up. Somebody would say, no, if you really want to know why peanut prices went up, we should look at the used car market. Yeah, well, that's the same thing going on here. If you want to know why the price of money is falling, why don't we look to the labor market? There's another market that's completely unrelated to the money market, but why don't we go over and check the unemployment rate to see what's going to happen? How about the supply and demand for money? If you double the supply of money overnight, you really think the price of it will just not change? Does that make any sense? If you double the demand for potatoes overnight or double the supply of cars overnight, if you just start doubling and tripling supplies and doubling and tripling demands, the people at the Fed believe that doesn't have any impact on price. And so why even look at the demand for money or supply for money? But in fact, the supply of money went up 50% from early 2020 to middle of 2021. 50%. How much did other goods go up? Oh, I don't know, 2%, 3%? So one thing goes up 50%, everything else goes up 2 and 3%. What do you conclude? It can't have anything to do with that supply chain. No, that's irrelevant. That number's not in any publication of the Federal Reserve since 2020. Not a single one. And not one Federal Reserve economist predicted inflation until December of 2021. That's a year and a half after the inflation started, and by that time it was almost 7%. That's when we have inflation.
Has the U.S. ever had declining inflation with increased printing of the printing presses, growing money supply? Has that ever happened?
No, you've never had inflation, not only in the U.S. or anywhere in the world. There's never been an inflationary period anywhere in the world, in world history, without a substantial increase in money supply. Never. There's not a single example.
Wow. Professor, there's a lot to talk about. I think we're going to deviate from our standard. Let's conclude this podcast. We'll release this immediately, and we'll record another one, which we'll release in a few days. So much to talk about. Professor, thank you.
Thank you, Hunter.
Thank you for joining us for the Rubber Meets the Road Economics podcast. If you enjoyed the discussion, remember to subscribe and stay updated with future episodes. Join us soon for more conversations about modern economics on the Rubber Meets the Road Economics podcast.